I want you to know before we get into this video that everything I say here is my opinion only. It is what is true for me. And I have the uniquely qualified right to say what I want because I've been trading for over 8 years and I've been profitable 6 of those years. And just so you know, I'm not like full of trash here, is I've actually been calling all my trades out live for free in my free Telegram channel for the past 6 years. And you can join instantly by clicking the first button in the description below, or I'll probably put it in the pinned comment as well. You can literally scroll through that Telegram channel right now in the next 10 seconds. I just call all my trades that I take and analysis and everything in there every single day, just to prove to you that I actually put my money where my mouth is. Here's what I'm here to say. I think you should abandon your trading rules. The moment that I abandoned my trading rules, trading instantly became more easy, more fun, more intuitive, and there was less of all of the BS that you see that comes with having to try to have a black and white defined trading system. First, I'm going to start off with why you think trading rules work. I really want you to think about this for a second. Why do you want to have trading rules? Think about it. The main reason most people want this is because it gives them a sense of security. It gives them a sense of structure. In a world of trading where everything is subjective and arbitrary and everyone's opinions, you have some people saying it's okay to add to losing trades. You have other people say it's only okay to add to winning trades. You have some people say only do trend trades. You have other people who say that's BS and they say that you should just trade ranges or support and resistance. In a world of insane complexity, trading rules promise you that you're going to have a sense of security, a sense of structure, a sense of predictability, being able to do the same thing over and over again. But in factuality, this is not the reality. This is complete garbage, and I'll tell you why. Because everyone interprets trading rules, quote unquote, differently. When we look at a chart, I could look at a chart on AUD CAD on the 1 hour and say, hey, I think this is in an uptrend. But then you could look at it and say, I don't know, it looks like a range to me. And then if I'm zoomed in, I could say, oh, it's a range, but then when I zoom out, it looks like an uptrend. But then if I zoom out even further, it looks like it's in an overall downtrend and it's just pulling back. Herein lies the super arbitrary nature of trading rules. If you have a rule that says let's buy at the 13 moving average when it crosses the 15 EMA with the 20 SMA going up versus down at a 45-degree angle, and you have all this trading criteria. So then you filter all your trades out through strenuous criteria, which ultimately is super subjective if you're manual trading. And then you take all this and you try to get that to work as a system. And so you take the signal and then you buy. Price goes through the zone and then you stop out. And so then you take the next trade and you buy, and then it bounces and goes to the profit target. And you do this over and over again. You have this super stressful system, and it ends up just being 50-50. You're right half the time and you're wrong half the time if you literally just enter randomly on the chart with a 1-to-1 risk to reward ratio and you risk the same amount every single time. It is when I understood this fact that I realized that trading rules are completely useless. They give zero predictive edge. They have no speculative power. Even when you look at technical analysis, it is only useful as a form of risk management. It gives you a way of saying I can enter here, and then if price goes up, I'll do this, and then if price goes down, I'll do this, whether the trade turns into a profit or a loss. The simple takeaway here is that you believe trading rules work because you want to believe trading rules work. They give you a sense of security and safety in an uncertain, random market environment. And we'll do a quick little experiment here. I'll show you. Here's how you could prove trading rules could work. You would go and define them in objective black and white terms and put them into an automated trading system. Most automated trading systems suck. They fail because the computer does the exact same thing every time. The code is the code. If it does this and that, then it'll buy here and sell here and do this and that. And most of those do not work long term. The best automated trading systems that I've ever seen have zero edge. They're essentially grid trading approaches where you just continue to add to losing trades. And then 99.9% of the time it reverses somewhere and you end up making a net profit if the positions were sized small enough. Outside of that, I have never seen a single automated trading system that actually uses stop loss and take profits and good risk to reward ratios like all these idiots preach online who have no clue what they're doing. I've never seen one of those work mechanically in a black and white system. Therefore, the only thing that makes a manual trading system, quote unquote, which I just call manual trading approach because there's no real systematic thing you're doing. The only thing that makes it work is intuition, that subjective judgment. that discretion, that discernment of price action for you personally to be able to say, in this case and under these conditions, I'll take a sell here if that setup sets up. But then in another case, it might be the same setup, or a double top or a break and retest or a bounce over resistance zone, whatever, all these little stupid technical analysis things. You'll see that and you'll say, okay, but in this case, this doesn't look good. And I might look at you and say, Ryan, why does that not look good, man? The setup is there, right? It's at the resistance zone, bro, and that's your trading system, right? You should wait first to get to a resistance and then sell. And you tell me, I don't know, man, I just can't explain it. It just looks weird. And this is why you have 99% of people out here trying to give advice on the internet and trying to give their own suggestions. And you can scroll through the comments of this video right now and you will see people giving their opinions. And I want you to remember, 99% of these people are not profitable and they can't prove it, and they don't trade live, and they have no clue what they're doing, and they're giving you advice and suggestions. This is the fallacy that comes with people trying to say, oh, if you just would have looked at the Commitment of Traders report, then you could have known everybody was short, then you could have done what the opposite of the people were doing, which is stupid in general, because the more people buy, the more price goes up. The more people that sell, the more price goes down. Someone else will tell you, oh, you didn't look at the smart money, order block, liquidity, bank manipulation, Wyckoff, fair value, distribution gap, Kobe stake, candlestick strategy that said that price was going to go up and you could have bought after the engulfing candle, after the 3 bear bars and the indecision candle. 61% win rate every time, bro. You can't do that, because how do you duplicate that every time? People are going to see it differently every single time. It only works in hindsight when you go and look back at the left side of the chart and you see, oh, look, see, it worked out perfectly there. You try to ask someone, do it live and predict it live in the future. Very few people will have above a 50% win rate. And actually, the most profitable traders that I see actually have significantly lower than a 50% win rate. It's anywhere from 30 to 40%. They just make more when they win versus what they lose when they're wrong. And even that is screwed up and doesn't matter, because I've seen people that have literally above a 50% win rate, but their wins are small and their losses are bigger, but they just win most of the time. But when they lose once every now and then, and it's a big loss that wipes out a few of the profitable trades, but overall they're profitable. So it's like, that's not even true. This just shows the subjectivity of everything. It is very hard to prove or disprove a manual trading approach due to the subjective discretion involved. You and me are always going to see the charts differently, and there is no way that I could teach you how to duplicate my exact trading approach and every single decision that I would ever make perfectly 100% of the time. Now here's the thing, I know I've been going off on this, but there is hope here. It is 3 simple words: experiment, observe, optimize. When you experiment, you are just taking little darts and you're throwing them at the dartboard, literally freaking blindfolded, if you will. And say you do that 100 times. And you can look back, then you observe, and you see what darts hit near the bullseye. Okay, well then let's go back and watch the video of me like throwing darts at a dartboard and see what I did that made the darts hit near the bullseye. And we're going to kind of keep those things in mind. So then you say, you know what, I think if I hold the darts like that and then throw like that instead of like this, I think I'm more accurate like that, because that most of those hit closer to the bullseye. So then you go and you do the same thing. You optimize, right? So then you go back to the drawing board and now you experiment with like holding the darts like that and you throw them like that. Then you observe and you see, oh, more of them hit near the bullseye. I'm going to do that again. Then you optimize and you say, you know what? Whenever I don't bring the darts back as far, if I just hold them out and then I throw it straight from there, then those hit even better near the bullseye. So then, you've experimented, you've observed, now you optimize, and you go back through another experiment and you do that again. And it's a slow, iterative process. But most people will literally never do this. They do not want to take the time that it takes to actually go through the years of iteration, learning, problem solving, trial and error, getting experience, building intuition, discretion, price action, discernment, letting all of these things come together to help dictate what trading decisions they can make. And they also super crazy have an insane fear of things not being predictable. They're like, no, I want to do the same thing every time. The problem with that does not account for the context. I have seen an automated trading approach that uses stop losses that literally just buys and sells at round numbers on a chart on the USD pairs with a 50 pip profit target and a 50 pip stop. It literally just buys and sells at round numbers. That's all it does. In the year 2021, this system generated a break even. It was a negative 0.8 R. So about a break even. But then in the year 2023, it generated 85 R. If you'd have risked 1K per trade, you would have made $85,000 that year, and it was automated 100%. This is the same exact system which 1 year breaks even and 1 year makes a profit. How do you explain that? Most people simply can't account for the fact that trading systems perform better over certain periods and worse over certain periods. And most people will not tell you that because it is not sexy to say that as a trading guru online. You want to tell people that they're always going to be winning and everything's all butterflies and roses and dandelions and rainbows and unicorns, but it's just not. That is not the case. The reality is that you simply just have to get experience like any other skill set in life. And most people won't do that. That is why most of you watching this video right now are just going to fail. The entire takeaway from this whole video is that I believe, in my very humble opinion, not financial advice, just a generalized suggestion for entertainment and informational purposes only. I believe that it will probably be best if you just forget about your trading rules and instead embrace the process that I talked about here in this video to develop your intuition and your discretion. Experiment, observe, optimize, and then do this over and over and over again, over and over and over. And if you keep doing this over time, you naturally develop that, let's just call it magic. You develop that sense of awareness, that sense of context and making appropriate decisions, that intuition, that subjective opinions that you have about what would be best to do given the context. And guess what? It's probably not going to look like anything you've ever seen online. It's probably not going to be something stupid like, let's wait for price to retrace to the moving average and buy with a stop at 2 ADRs below that and then a 1 to 3 risk to reward ratio. It's probably not going to be any crap like that. It's probably going to be something very nuanced with a lot of subtleties that only works for you specifically because you've taken the time to generate the experience necessary that dictates a manual trading system actually working for you. And when you can do that, my friend, you become one of the 1% of people that actually make money long-term in trading, and it's going to look nothing like all of this nonsense that you generally see on the internet.